There are a lot of people who don't understand this asset. They're going to buy it, and it's going to work, and they're going to feel great. And they're going to think, hey, I made 3 or 4 times my money. And they're going to sell it, not realizing that it's going to just keep, as he says, it's going up forever, Laura. I mean, this thing, unless we're wrong about this being adopted as the base layer of money, and I see no evidence to suggest that's the case, these coins will be, 100,000, then they'll be 400, then they'll be 1 million, then they'll be 4 million, then they'll be 10 million, and the time frame on all of that is probably 20 years because, Microsoft started in the early 80s, and here we are 40 years later, that it's the multi-billion-dollar company. That this doesn't happen overnight, but the point, as you raise is you don't want to sell, it's like Manhattan real estate, as he said, you don't want to sell a cornerstone asset that can't be replicated and can't be debased just because you have a profit in it.
Larry Lepid is confident that Bitcoin will reach a multi-million-dollar value per coin, which is why he strongly warns us to not sell our Bitcoin regardless of recent price pumps or corrections. In his most recent interview, Larry discusses how many investors tend to act on impulse when it comes to selling, especially after price pumps and in the case with Bitcoin at the moment. Sure, you may make a profit if you immediately sell it after it pumps, but remember, you could be passing up on profits that are 1,000 times larger than what you're getting now. This is what Larry Lepid wants all of us to remember. Make sure to stick around to the end of the video where Larry explains why Bitcoin will ultimately become the base layer of money everywhere. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news all for free. Click the first link in the description, enter your email, and join over 50,000 others to become a better crypto investor right now. Now here's Larry Lepid as he discusses why we need to hold Bitcoin.
If we go to 200 and it dips back to 100 and you paid 200 for your last bunch, don't panic. If you look at it historically, I think the volatility is becoming less over time. There's some evidence of that. But having said that, I think everybody needs to be prepared to deal with the volatility, and everybody needs to think long-term. And because long-term, I'm quite confident that this is going to be a multi-million-dollar per coin asset. And so if you're buying it at 72 today, it feels like you're paying too much. But one of the great stories from Madeira, somebody told me they knew Max pretty well. I guess when Max was buying his first coins, he paid, this is Max Keiser, he was paying 50 cents. And he felt like he'd overpaid because Trace Meyer, who's a true OG, was buying his at 30 cents. So, pretty much everybody who's in Bitcoin feels like they're too late and they're overpaying until about 5 or 10 years go by. And then you're thinking, people are going to be saying, what do you mean? Hey, you have one whole coin? I would just suggest to people that, are looking at this and listening to this, that they take the time to really study Bitcoin and understand it at a deep level. Because, one of the things we all try and orange pill people. And sometimes I think we forget when we're orange pilling them, help them to understand how volatile it can be. As a perfect example is, if you were orange pilling people a couple of years ago and this, when it was in the 50s and 60s, and then it dropped to 15. I had some friends who, when it dropped to 15, they thought they'd made a mistake and they sold it. And that was the wrong thing to do. And I think, people need to look at the history of the asset, understand that, it's higher highs, higher lows, but there are big drawdowns. And so, you don't want to use a lot of leverage with this asset because of these drawdowns. And you want to, in general, aim to more dollar cost average as opposed to plop buy. And so that you don't find yourself in a situation where you need to sell your Bitcoin when the price of Bitcoin is on a drawdown. Because I think everybody who's been in Bitcoin for more than 4 years, generally speaking, you gain purchasing power. But sometimes, in that cycle, you would lose purchasing power if you bought it and a year later it had fallen. So I would just caution everybody to understand the nature of the asset and to think understand it deeply enough such if there is a drawdown, you won't be tempted to sell, because in fact, what you should be doing is buying that drawdown, not selling. I bought my first ones at $300. Not enough, obviously. That's the other feeling that's the feeling everybody in the space has too. I wish I'd bought more. Well, we all do. That's just the nature of it. But buy what you can because it's a superior savings technology, and then, sit back and go live your life and do things you enjoy, knowing that your money is not being debased, which it's a very comforting feeling, right? Sound money would restore, sound values in the country way, way, way off the rails. Anyone looking at it, anyone living in it can understand that and see it. And although there are a lot of good things about the country, there are a lot of ways we've gone in the wrong direction. Yeah, when we get to the stage where we've got, a Bitcoin standard or a sound money standard, things are going to be incredibly good, much, much, much better. But we need to get there, and we need to, there's a chasm that we have to cross. We're not even, out over the middle of it yet. We're just getting started on that crossing process. But once we do cross it, it will make the world a much better place. So, I'm quite bullish about the way the world is going to look, and, for your generation, my kids' generation. But yeah, what you've described, they're all suffering. They're all in their 20s. They're like, hey, Dad, there's no way I'm ever going to be able to buy a house. And I get it. And they're all doing fine. And I get it. I mean, the system is really, really broken. And, that's why it's, as we all say, right? Fix the money, fix the world. I mean, and you've got all these political people pointing fingers at each other, many of them not really realizing what the core issue is. And the core issue is the unsound money. The big picture is the things that we've been warning about for some time now, many of us for years, really, but more recently, the last few years, are all starting to kind of come together. $1 trillion of debt added in 100 days, and, record deficits, no spending restraint by Congress, the approval of the ETF, and the multiplier impact that's had on the price of Bitcoin. And as we know, it's kind of been a relentless uptrend, strong and up to the right since 50,000 when the ETF was approved. And, there's another thing, probably a lot of people didn't focus on it, but I did, and it's a big deal. There was a letter from the Industry Swaps and Dealers Association to Federal Reserve saying, hey, you know what, we really think you ought to throw away this SLR, this limit that you place on the banks and their ability to buy Treasury debt. And of course, the reason for that is that there's a lot of Treasury debt to be sold, and the number of buyers are slowly but surely shrinking. And if you really read through the lines on that carefully, and it's a lot of inside-based and monetary plumbing, it's more or less kind of QE infinity, or it'll give the banks the ability in an unlimited way monetize the debt, put it on their balance sheet because they don't have to count it as reserve, and so they can more or less print money to buy the government debt. So it hasn't been approved yet. It was a letter, but it's clearly those kinds of things. They start with a letter and then they come with a Federal Reserve proclamation that this is what we're going to do. And they did it in 2020 because at that point in time they needed to do it because the debt, they were having a hard time selling the debt then as well. So to me, it's a big deal. The debt is there. It's got to be serviced. There's not enough income to service it. They will have to print the money to service the debt. The printing of the money will dilute the monetary stock, which means the purchasing power of every monetary unit will be less. Full stop. Yeah. So, as an investor, you need to own assets which the government can't print. So, Bitcoin is the best. Gold is up there. Real estate's up there. A good monopolistic stocks kind of count, et cetera. So there are ways to protect oneself, and I think people have to do it, right? Property is taxed, but it's generally when it's physical property, and it's real estate taxes, and it's the local authorities that want, that provide services for the property that justify the taxation. They haven't gotten to the point where they tax, investment property until such time as it's a realized gain. And that would be a big, big bridge to cross, but it wouldn't surprise me. They'll be looking, I remember there was some talk, Bernie Sanders and others were talking about trying to tax, billionaires just on unrealized gains or on their net wealth. And, look, a political system which is failing, which needs money, they're going to flail around and try and get money wherever they can. And so I think it's certainly one of the risks with Bitcoin. I will say one thing, I respect Michael a lot, and I think he's right that it is property, but it actually could, over time, it could become more than that. I'm not sure if he believes this or not, but I actually believe it will ultimately become the base layer of money because it will be a form of money that's characteristics of which are so superior to the alternative, which is the dollar. The dollar will fade into existence and we'll have sats, will be the new basis of the monetary system. But admittedly, that could be many, many years out, and I might be getting ahead of myself.
So there's Larry Lepid sharing his valuable insights for investors and the future of Bitcoin. In his discussion, he emphasizes the long-term nature of Bitcoin investment, cautioning us against the temptation to sell during periods of volatility. Larry advocates for a patient approach that focuses on accumulating Bitcoin over time. This perspective aligns with the idea of dollar cost averaging, wherein investors regularly buy small amounts of an asset regardless of its price fluctuations. By adopting this strategy, investors can mitigate the impact of short-term price swings and position themselves for long-term growth. As he said, Bitcoin is poised to reach $10 million per coin due to its amazing qualities and current success. With Bitcoin currently facing extreme price pumps with slight price corrections, Larry reminds us to stay patient and not get too excited for instant profits. A longer wait can result in much bigger gains in the future. Before you leave, don't forget to check out our daily 5-minute crypto newsletter. It's packed with expert predictions, on-chain data analysis, and the latest breaking news in the crypto space, all delivered straight to your inbox completely free of charge. Join over 50,000 subscribers who are enhancing their crypto investment strategies by clicking the first link in the description. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.